Do the mid-term US elections matter, or is it all about inflation for the stock market? Has Albo got super in his sights and crypto falls out of bed again? Is this the end for Bitcoin? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, as we do this, we're still waiting for the results from the mid-term elections. Is it really important to the stock market, or is it all about inflation?
Oh, look, I think it's just one of these little stories that we won't be talking about in a couple of days' time, Peter. Surprising the market's rallied into it. I guess it just shows a bit of strength. But look, the market, unless there's a surprise result, and that would be the Democrats maintaining both houses of Congress.
Yeah. The market would then fall.
The market would then fall. This isn't going to matter. So look, market likes a bit of gridlock, no nasty taxes. So look, it's probably better for the equity market. And I think the other thing, Peter, is that maybe this explains why people are buying it up. Is that, as you've said before, historically, after the midterms, is actually the best year in the market. So a lot of people are talking about that as well.
And a lot of the theory of that third term idea is that a lot of these midterms throw out a lame duck president because they lose the power of one of the important houses of US Congress. And as a consequence, there's no surprise regulation, there's no new taxes, all that sort of stuff that Wall Street likes, gives certainty. And but I still think you're right. You pose this question. Inflation is still the most important, and that's on Thursday this week.
Yeah, Thursday US time, we'll get the result on Friday. So that's going to be the big number. Yeah. Right? That's
if
really
it's
what the
not a good result on inflation, stocks will fall. If it's a good one, stocks will go up again.
Yeah.
Okay, let's go to the next big one. A number of stories around that Labor and Albo is looking at super, Paul. What are you seeing?
Well, I think it's inevitable, Peter, because also the big industry super funds are also pressing the same sort of story. And some terrible reporting about this, about the idea that they're obviously going to look at sort of capping the amount that you can have in the so-called accumulation phase of super. Remember, the amount you can have in the pension phase is already capped, right? Yeah. You can't put any more than 1.7, it doesn't matter what you do.
You can grow over it if you're a great investor, but you can't put any more in.
And also, it's very hard to get money into super, right? Because of the contribution caps, right?
Yep.
Yeah, so the idea about people having, $5, $10, $20 million in super, it's just not going to happen. Now, there are people already who've got that
11,000 I read.
But it's not going to happen. And there's talk today that, maybe that number of 5 million will come down to 2 million.
Oh, well, then that'd be
and then also, of course,
be a vote changer,
there are some really bad statements out there. The head of Australian Super being quoted as people, you're tax-free. It's not tax-free. There's tax of 15%.
Yeah.
Okay, that's concessionally taxed, but it's not tax-free. So really the industry, a lot of lobbying from the industry super funds, they hate self-managed super funds, right? They want to destroy self-managed super funds. They are no friend of a lot of people out there, right?
The problem for industry super funds is this. And let's take Australian Super. And let's just say they're charging 0.8. They charge a bit more than that. Let's just say they're 0.8%. And you've got $1 million in there. That's $8,000 they're charging those people. And they're the people who say, maybe I run a self-managed super fund that might cost me $3 or $4 grand to do it. And people have left industry super funds. And that's why industry super funds don't like self-managed super funds.
Well, I think Australian Super and a couple of the other big super funds have got their own problems about transparency, right? About 30% of their investments are now unlisted off-market investments. We don't really know what they're really worth. Yeah. So there's a few issues with that maybe the government should be a little more focusing on the transparency and governance around super. Yeah. But, I think it's easy dollars because, 11,000 people or 80,000 if it goes to $2 million, who cares? Yeah. This is going to happen next budget, right? That's in May next year. I think it's inevitable. And I guess what you can do now, if you're in that category, is probably get some more money into super, because the big issue will be whether it's retrospective, how they apply it. Yeah. But that's perhaps one strategy. But look, I think super's seen its day. It's and look, it's not unfair, right? I don't think it's necessarily unfair. But the point is, you can't. Everyone looks at these people with lots of money in super. You can't do it now. Yeah. It's already been capped. It's been capped now for a decade.
Yeah, and the problem I have is you have one set of rules and people follow those rules, and now those rules are unacceptable and they want to penalise them. this could be a vote changer, Paul. The talk was 5 million people, 5 million or over, could face problems with their concessions, the tax concessions. But if it goes down to 2 million, that's a lot of Australians. Because a couple of teachers who may well have got $1 million each could have had a self-managed super fund. They can have 2 million very, very easy.
Well, I have to see how that applies, Pete. But yeah, I mean, look, it does get down. So, look, I think there's going to be changes to super. Every government plays with it. This government will do the same.
Yeah.
They could have done it in the last budget. They didn't.
Yeah.
Put off the hard decisions, but this is probably coming in May next year.
Yeah, and I guess Labor does say a lot of the wealth they're targeting don't vote Labor as well. Let's go to the next one, and that is crypto's had a shocker. It's dropped Bitcoin down under 20,000.
Under 20,000, about $18,500 US. Now, Bitcoin was building a really good base at $20,000 US, Pete, and we had some more turmoil in the market last night. Bitcoin down about 11%, Ethereum down about 17%. This is on the basis of one of the largest exchanges having liquidity problems. So the two biggest exchanges, which are Binance and FTX, they're going to merge effectively their non-US operations, which is to do with FTX having some problems around liquidity. It's an unregulated market, so you sort of, I guess, it brings home what the issues are still with crypto. We don't really know what's going on. Yeah. The lack of regulation, this is yet another problem in the market. And it is not really acting like a store of value that it's supposed to. So for all the crypto bulls out there, this is another challenge. So I don't think it's the end of Bitcoin per se, but I thought Bitcoin was building a really good base at US $20,000. Yeah. We smashed through that. And at some stage, a lot of people are going to lose money on crypto, right?
A year ago, it was $66,000 US. So, and I think this is the bottom line. People went into crypto for one very good reason. They believed that the returns were massive. And when the returns are massive, the risks are massive. And that's the really important investment lesson for anybody. When the returns are massive, the risks are massive.
I mean, one of the other problems with crypto is no one's really demonstrated a great case for it apart from being to allow the black market and the tax evaders, everyone other problems as a way to exchange finance.
Yeah.
Potentially, it's a good way to cut foreign exchange issues out, but look, there's just not enough liquidity there.
And central bank e-currencies
they seem to have gone a little bit quiet on that.
But there was talk about it, so one day in 2 or 3 years' time, they'll probably be around, and that will be another threat to the honest people who want to use Bitcoin for just doing simple foreign exchange transactions without a middleman. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.